Welcome to the HC Insider Podcast, a podcast dedicated to the commodities sector and the people within it. I'm your host, Paul Chapman. Today we're diving back into the world of tokenization and how it could transform how commodities are traded, and even return to a world where commodities operate as currencies. Our guest is Brent de Jong, chairman of Emergent Technology, which has launched Gcoin. Brent's also the managing partner of de Jong Capital, an opportunistic investor in the commodity value chains. As always, you can support the show by leaving a review on the platform you're listening on, and I hope you enjoy the episode. Brent, thanks for joining.
My pleasure. Great to be with you, Paul.
So today we're talking about tokenization of commodities, and ultimately using commodities as currencies. So somewhat esoteric, and I'm hoping you're going to help us cover that journey and get to a point of understanding, or at least for me. Before we dive into Gcoin itself and the theory, can you just set up kind of the market today and what some of the challenges are around securitization of commodities that have led you to see tokenization as a potential solution?
I think that there's several themes or trends that are happening, within the commodities industry, and actually the catalyst is outside of the commodities industry, and it's really being brought to the commodities industry. For example, consumers are differentiating the products that they want to consume. They feel greater sense of responsibility today more so than ever in terms of being that part of a sustainable supply chain, being a good advocate or steward of the world that they live in. And so they're asking questions. And it's interesting. It's both the young generation and it's the older generation that are coming and retiring. And sometimes I'm a father, and sometimes it's my kids that are asking me and spurring my change in behavior. And it is that consumer behavior that is being brought across to the supply chain, and really it's being borne out in the sense of transparency. Likewise, one of the other influences in the commodity chain is the whole change to banking, and our banks around the world have become a lot more like utilities, and that's because whether it's Federal Reserve here in the United States or the bank regulators around the world, they've wanted to help take out systemic risks out of banking systems and sectors. And as a result of that, that systemic risk, sometimes it's then the credit that's being supplied to the commodity supply chain or to the trading companies, or also some of the regulation that's being put through the banks in terms of asking source of funds, how this is happening. Is this money laundering or terrorist behaviors or different things? And so you have that being brought to the commodity supply chain at the same time. And maybe the third trend that we're seeing in the commodity world is that just the withdrawal of a lot of the European banks that have been traditional providers of significant amounts of supply chain financing, trade receivable financing, are leaving the business, and those that are staying are moving to much larger counterparty sizes, because then it's less risk for them in terms of fraud or other underwriting risks. So it's a real dynamic, and it's this started years ago, but it's been really kind of snowballing and coming very ferociously across the commodity world. And I'd say that what's been the biggest catalyst as of late is what I said first, of that consumer behavior change. And so it's pretty exciting to see these trends, and also that, hey, there's this new technology out there that can help respond or solve or address some of these trends within the commodity space.
So you've got the push towards traceability, sustainability is tied in with that. We ourselves on this podcast have covered the tightening of commodity finance out there for a variety of reasons, not least banks exiting for concerns over both fraud and return. You've also got the challenges there around the regulation on the banks and increased capital requirements after Basel III, etc. This is all against a backdrop as well of issues of fraud, particularly are in the metals space. Can you also frame up for us as well, kind of that aspect as well, where you've had missing wet metals in warehouses or metals are painted red to be copper, etc. Can you perhaps just set up for us how the whole metals bonded warehousing system works at the moment and where some of the issues lie?
It's a great question. And, I've seen pretty wide ranges, estimates in terms of it depends on what, metal you're talking about, right? But let's take gold, for example, where I've seen estimates as much as 4% of the official market could be fake. And it doesn't actually have to be as fake as what you're talking about of like painted, just lead, for example, painted gold, but it could be, in fact, a gold bar that's a duplicate of another gold bar, and they wanted to just disguise the source of the gold and just get it into the supply chain, and that it just kind of gets copied. There's no central database that exists, or distributed database, or is what our ethos really is. But at the same time, that creates a centralized record of sorts. But it's there's no way to confirm. It's like, is this a duplicate bar? Is there two of these bars out there? And so, we've been solving a lot of these types of problems, and from a technology perspective. And in the first use case that we really tackled was gold, but the technology is ubiquitous in terms of what types of metal. So, for example, on the gold side, we actually have a product we call the Gold ID, and we actually take a picture of the kilo bar, and this is the same for London Good Delivery or Banker bars, or however you want to call the other bars as well. But we take a picture, and that picture is transposed into a math hash table. That math hash table, is basically taking data points across this gold kilobar and creating a map of that kilobar. Kilobars, often look, very shiny, very uniform, but they're not. They have pooling striations on them, and it doesn't even take a microscopic, kind of level review of that bar to identify the differences. The camera on today's smartphones is able to pick up those differences, and we can pass that through an algorithm to create that math hash table. And then you can use AI or machine learning in order to teach the system how to recognize those bars differently and to compare, is this what it is? And this is without a serial number on them, right? So when you put a serial number on it as well, then it gets locked down even more. And so technology is pretty amazing, in the sense of, and sometimes it's blockchain have a nice record. Sometimes it's something like our Gold ID, where it's creating this certainty of the physical product. The power is when you can put the both together. You can understand the full provenance, where it's come from, plus the verification of that asset in of itself, and then you can put insurance on top of it if you want to or need to, but to have your belts and suspenders kind of approach. But at the end of the day, insurance it should be incredibly cheap, because the level of certainty is already very solid because of the technology in of itself. So these it's fun to see how this is all evolving and changing, and solving a lot of the basic problems that exist within the metals and broader commodity space.
It's fascinating, isn't it? Because you've got these two threads are coming together. One is pushing for traceability, right? The idea that you care, Apple or whomever, care where their cobalt comes from. And this is cometh the hour, cometh the man type thing, which is you've got this tokenization capability, which is able to efficiently and effectively start to match IDs at that kind of granular level.
And I think it's even more exciting than that, Paul, because Apple cares because their consumer cares, and I'm sure Apple has a great ethos in themselves, but like all companies is that are selling products, you want to understand your consumer base, right? And the neat thing about this technology is that you can take it all the way back to the origin of something, and you can take it all the way forward to the final consumer. And that level of connectivity with all of the intermediate points along the line connected is really powerful.
Yeah. And I want to come back in a moment back to, so I guess, your first use case, which is gold. Can you just, before we sort of dig into tokenization and just give us a quick overview of that to get me up to speed? There are other market pressures going on at the moment as well, right? We've got obviously rapid rising inflation. You've had bucket loads of quantitative easing around the globe from various central banks. We also sit in a with a backdrop of less certainty around currencies, less certainty around asset value, etc. Can you just frame that up for us at the moment and how that slides into this commodities discussion?
Yeah, I think the other topic that's front and center for most people also is cryptos, right? In the sense that you look at most FX, trading rooms today, they're no longer trading FX, they're trading cryptos, right? And so whether it's the fear, inflation or devaluation or other things, or if it's greed, where's the volatility? Where's the just driving the opportunity for return and a great return in a period of time. Those two things, normally, commodities or gold would be a great, answer or counter answer to both of those things. But there's a lot of new thinking that people are saying, well, maybe there's a new asset type that could be or should be that protection for rapid rising inflation, for quantitative easing, less certainty type of thing. And look, I believe in gold, and this is why we spend so much time on it. But I do think also we need to realize that people hold different things of value to them, and the great thing about these technologies is you can replicate them, and the utility that we bring to gold through our G coin and our QOS network, but that could actually be the same for pineapples or other commodities. And there's probably many, many better examples than the pineapple, but it's a very rapidly evolving world where you can bring utilities to new commodities or assets, NFTs or different things. And people then can choose really what is of value for them, and then they can use it themselves. I tend to believe, our world is still driven by the physical reality that we want to live in, and physical commodities will continue to be the kind of core values of which trade is happening, around the world. But I think, for us who live and invest and work in the commodity world, we need to understand that there are other things that are kind of competing for this role, and whether it's legitimate or not, there's a lot of people out there that are really focused on this new phenomenon.
Can you just dig into that a little?
I mean, I think that whether it's Bitcoin, Ethereum, or central bank digital currencies, or and the list can go on, that people are pointing to in terms of that store of value. I think this is the real opportunity for the commodity spaces, is to actually embrace what's happening, but also apply it to the world that it lives in. For example, let's think about basic risk management. And if you had a gold mine that sold its gold for G coins, because our G coin is our tokenization of our responsible gold kilobars that come out of our manufacturing process. But if you have that, now the functional currency for that gold mine is gold. So you think about, from a risk management perspective, it becomes a lot easier to risk manage that out. The same could be true of coffee. So why doesn't Starbucks have a coffee coin and pay its coffee growers get paid in coffee coins, tokens, and it's the consumers get paid in coffee tokens? Then it becomes a kind of a circular closed loop economy, and you can have that circular economy talk, interlink with another circular economy, with another circular economy, and so forth. And in that instance, then coffee is the currency of value for that ecosystem. Gold, maybe then the G coin and the gold could be the reference between these circular economies, right? And so, just like any other store of value or any other way that it could be organized, and I think a lot of the power. I mean, we were very early on the supply chain. I mean, I first conceptualized tokenizing gold in 2012 and got a patent to tokenize any asset to the blockchain. So if it's coffee or gold or other things. So I think we're early on this one also, but my view of the world right now is that it's these groups of people and it's these circular economies that are really going to drive the way finance and commodity flows and happen going forward. And the best thing for the commodity community, in my opinion, is that for it to use what it produces as a way of value and to create these circular economies and therefore insulating themselves and protecting themselves in terms of creating just a natural demand for their product and also creating protection from other stores of value kind of creeping in or trying to displace the roles that commodities have had for since the start of time, quite honestly. And so I think it's this intersection that's going to be really interesting of the technology that can connect entire value chains, but also then the use of the physical asset of itself.
Fascinating. And we will sort of end up on digging into that further, that idea of commodities as currencies. Just before we do that, can you just very briefly frame up tokenization for us? And then I really want to dig into kind of where the challenges are, because there's challenges from just general resistance, inertia. There's also interoperability challenges. There's challenges around jurisdiction, legal frameworks. You've been working on this for almost a decade, so have really been on that journey. But can you kick us off with just the basics of tokenization? Most of the listeners will be familiar with it, many intimately, but then dig into those challenges.
Tokenization at the core is we produce something called asset cards in our ecosystem. In this asset card, sometimes people are use terminology NFTs, non-fungible tokens as well. But this asset card for us describes an asset. In our case, the first use case that we put out is the asset card as a responsible gold kilobar. And it's responsible, and I'll talk about that in a second, but it's a kilobar of gold. And so basically what it is that asset card describes that kilobar, where it was manufactured, is it 99.99% pure gold, where it was mined, just all these rich details about the asset. But that asset card could again be any other commodity at once. But what we're doing is that digitally fracturing title to that asset. And so we have this ERC20 token because we built off of an Ethereum version. We're actually a third generation Ethereum chain. And so this asset card now has 1,000 G coins or has owners, fractured ownership of this physical bar. And for us, it was really important. We actually went back to the Minneapolis Grain Exchange of the 1850s and looked at their legal technology of the warehouse receipt. How is the warehouse receipt structured from a legal perspective? What is its status? And the warehouse receipt is a legal ownership over the grain or other commodity that was being stored at the Minneapolis Grain Exchange. And so we took that legal technology and stapled it with the actual technology and of Ethereum, in this case, ERC20 tokens. And so your warehouse receipt or your Gcoin token becomes then ownership of that asset card. And so this process of tokenization, of this process of linking ownership to an asset is powerful because now that asset can stay in one location, but the ownership can be passed around and through these tokens. ERC20 tokens are just a designation within Ethereum, but basically meaning that there's no limitations on the movement of that token. And so in our system, the G coin, you can redeem your physical gold. Now, of course, you need all 1,000 G coins to redeem the entire kilobar. You can exchange it for other pieces of gold, but that asset's yours, or it's yours with a group of other people that you own. And so, really, what becomes important is standardization, because you can have, and some of this is happening even with NFTs today. You have thousands, hundreds of thousands of asset cards, NFTs being passed around the marketplace. And it's like, well, what is it that I really own? Is there a lot of data on that actual asset card? Is there a lot of data on understanding the underlying? And so that's what becomes, in my opinion, the most important part of this whole process of tokenization. We actually worked with Deloitte and Touche and our internal team originally to set standards. And it really isn't to set standards, because in the gold industry, there's so many different standards that apply to it, but rather to track standards and to say, look, here's the manufacturing standards for mining, for logistics, processing, vaulting. Here's the standards. And so if you want to permission into our ecosystem, you want to have an ability to create these asset cards, because this is a distributed system, then you have to meet these standards. And that's why we wrote the responsible gold standards. And responsible gold standards, there's been others like the World Gold Council now has something called the responsible gold mining principles, where they upgraded from the conflict free to include more sustainability type measures there. But there's 30 different standards that apply to the gold industry overall. But you bring it down, and there's really 150 risk cards that people have to really follow. And so if you check these off at a risk level, what's your labor policy, for example, are there child labor involved, or what's your environmental wastewater policy? Are you using mercury? Are you, there's all these kind of real root basic risk cards that you can ask across the value chain. And in fact, the United Nations called us out on this DApp, or decentralized application that we built for responsible gold standards, as one of the most impactful technologies in terms of advancing the sustainable development goals. And if you look at it, as 99% of what we did was actually on the standardization front, and only 1% of what we did was on the technology and recording front in terms of what's happened. And so that, I went down that approach of standardization because I was unsure ultimately of what those asset cards should be. There's a lot of different forms of gold in the world, whether it's the large bar format, the kilo bar format. If you go to India, it's 99.95% gold versus 99.99%. You have Krugerrands, you have Buffalo Heads, you have all these different asset types out there. And you can go create asset cards for all those types of things, but we wanted to make it super easy for that end consumer to be able to say, look, I know what I'm buying. I'm getting a piece of this asset, and this asset's a responsible gold kilobar, which is 99.99% pure. So our tokenization, engine is geared towards, being able to have that consumer know exactly what they have, in their wallets, or what they're using for commerce on a daily basis. And then they can know exactly whether it's a big mine or a small mine, or exactly where it came from. We've tokenized gold out of Suriname and Argentina, the United States, different countries, and we know exactly, where this came from. And, the consumers do as well. They can see in their wallets that audit report, the assay report, where this physical, asset came from. And so it's pretty interesting to see that, tokenization, while a lot of people talk about it as a legal title, forget that you need to really build it in such a way that the end consumer can easily understand. So you need some level of standardization on the actual physical product as well.
And are you seeing, maybe a facile question, but are you seeing a premium on that gold because it's met all these standards, or are you seeing a discount on gold that hasn't met those standards? What is the real world ramifications around pricing that you're seeing?
So today it's a premium, perhaps in tomorrow will be a discount. But the premium. So we actually produce responsible gold, and it's not actually us producing it. It's really us tracking the responsible gold, and it's the gold ecosystem that's producing this, right? Because it's a distributed ecosystem. But the gold that is getting the premium is that we started with the fabricators for gold industry to be able to put it into jewelry. That some of the more just differentiated consumers, or consumers that have differentiated opinions on products, we're pretty excited that when LVMH's brand Bulgari picked up responsible gold for one of their watch lines. And there's a premium associated with that because they can directly tell their consumers where this gold has come from. In that instance, it's not a kilobar, but it is a grain of gold, or kind of a vial of grain of golds that have crypto seals on them to be able to track it that they're buying. But it's for us, we wanted to lead with the fabricators first, to be able to demonstrate, hey, there is something of value to the transparency and to the physical process. And then moving into the G coins themselves, which is tokenizing responsible gold, premium has been developing as well. We're just launching on a few different exchanges, and we'll let the exchanges really set the premiums. But it's interesting because the premiums, in my opinion, so far is different there, and it's more because of utility, the utility nature, the ease of using it, being able to send it in 1 second anywhere in the world. It stays on chain. A lot of people trade Bitcoin and it ends up in a custody wallet and off chain, whereas Gcoin stays on chain and stays true to the ethos of this distributed system. So for different reasons, we're having premiums develop. And, again, we're just tracking the system and the markets, developing these things and telling us and the world what is the value of doing things in the right way, whether that's the right because it's the physical supply and transparency and the responsible ESG nature, or if it's right because of compliance and KYC and AML and the utility nature and the ease and velocity and the scale and throughput, that creates velocity in terms of the token on chain. And so it's these types of great things. It'll be interesting to see kind of which one wins out in terms of really dictating what that right premium is. Is it the fabricators or is it the utility nature of the token, of this physical asset? And my belief is that over time, as the system becomes more of a standard system for others to use, then at some point it becomes the price of gold, and it actually then you could have a discount on other responsible gold or non-G coin. 40% of gold manufactured or mined today are mined by people or companies that are part of the World Gold Council. And, many, if not all, it's always hard to stay on top of, who's coming in and out. But, I believe all actually are fully signed on now to both the conflict-free and the responsible gold mining principles, in which case all of that gold could come into the responsible gold system. And, you could end up with that becoming the standard on the way that physical and digital gold is tracked, traced, and consumed. And if that was the case, then I do believe you would end up with a discount, and perhaps even a significant discount, non-responsible gold as well.
Mm. So just, I understand the G coin and the utility aspect, and we'll dig into that a little bit more in a moment. But just staying on the actual, use case in the supply chain, when it came to Bulgaria or whoever creating their gold watches from this gold standard, are they actually then acquiring it from those specific warehouses and then retiring the asset cards? How does that actually work in reality?
Yeah, it's a good question. And it's the same thing if you redeem your gold, if you're a G coin and you redeem your gold, the asset card or the tokens get destroyed, right? So the asset cards can continue to exist, but the tokens off the back of them are destroyed. We have a legal entity in Switzerland called G-Mint, and that G-Mint is a bankruptcy remote entity that it is the tokenization, the tokenizer, of these asset cards. And so, in the example that the fabricator, has grains of gold. Remember, these are vials that are filled with grains that have crypto seals on them, and you can pass them over your Android phone through an NFC and check what's the whole provenance there. And so, when it's packaged that way and it's sold, when that vial is opened, that crypto seal creates an event on the blockchain. And so, in that instance, it's recorded and attached to that asset card that there has been a disconnecting that, and so that asset card can never be anything more than just an asset card, a set of information on what was there, and those exist into perpetuity. There's no destruction of those asset cards, but of course there's no tokens or there's no product any longer that is available. And if you get somebody else that takes the next vial of grains of gold and checks and says, or there's they swipe it and try to see, is this been tampered with or has it been broken? And they'll know whether it's, actual good gold or perhaps not. And, and I'm not saying it's not gold, but, maybe somebody else is mixing something into the supply chain. All of those are recordable events on the technology. So as fabricator, they would have the choice. Do they discard it? Do they send it back? Or but then they have to represent to their end customers. And most of the people who are working in the system take this really, really seriously. And to give you an idea, if you do tamper with the system and you're found to be out, there's actually indemnities that the entire supply chain provides to the consumers, and they have to make them financially whole through the provision of other, responsible gold that's come out of the system. So we have, the technology to really create the straitjacket, but also the legal environment in order to make sure that we have good actors, within the system.
So I think it's coming together for me at least. You can take this asset class, this physical commodity, and basically using the same technology enable the supply chain to have greater surety over provenance, traceability, and a more efficient way of trading. This is something that the traders themselves can trade, presumably in a more efficient manner. And then it also has that utility for everyday consumers as a store of value. I think that sounds
Yep,
right.
you got it exactly right.
Good.
You got there a lot faster than I did, Paul. It took me 10 years. It took you 10 minutes.
Yeah, well, that's not true, but I can see that cascading into other commodities, and I imagine there's challenges around. We'll come on to it. How do you give that coffee bean or bag of coffee its unique identifier? But where do we stand? Because obviously, to get that utility for everyone, you need interoperability to convert into cash, to convert into other asset classes. And there's also the legal framework to all of this, to the whole sector, which is very nascent. It's certainly coming under more scrutiny in the US. But essentially, what this does do in forms of risk management is also in some ways protect people against trade barriers, tariffs, and the rest, if you're just simply moving a commodity in some ways, as opposed to funneling it through different asset classes. So where does, maybe we can take that first. Where does the legal framework stand on all of this, and where do you see that going?
The legal framework is evolving, and regulatory and legal. So, although we conceptualized a lot of this stuff in 2012, 2013, we really didn't, put our foot on the gas pedal in any way, shape, or form until 2016. And that's where we put our first $1 million in. And we actually put it into legal and regulatory and tax as well, because tax is a really significant part of this. And let me just start with the tax point first. We vault our gold in Switzerland so that it gets the right tax treatment. As an example, we were looking at vaulting in Texas. I live in Houston, Texas. I came here 15 years ago, and gold is still a legal currency and under Texas law. And we're like, oh, this is a great place to start with. And we actually found that it was not the right place to start with because of tax. So we were going to vault our gold in Texas. Texas has a great vault here that was backed by the state and started. But what we found is that if you have a consumer in, let's say, New York, and you have a e-commerce company producing a good or physical good, whatever, out of California, and they were using G coins that had gold vaulted in Texas, actually what would happen is it would create a nexus for that e-commerce company to Texas, and they would have to pay a nexus tax or franchise tax or different things within the country. So we said, okay, well, that's not going to work because not every company in the world wants to be a Texan company. So we actually did a review from a tax perspective all around the world. We went through 120 different countries. And it's not surprising at all that we ended up with Switzerland, as it's been the place for how long as a gold center. But that by vaulting the gold in Switzerland and actually using that tokenized gold in Switzerland, it doesn't actually create the nexus back to Switzerland for a company to use these tokens in the commerce, right? So that's we actually started with tax, simultaneously went with legal, and we said, okay, what is the the right characterization? We had more than 20 law firms around the world working with us, and we used, as I said, the Minneapolis grain exchange warehouse receipt type technology. But we went out and we got multiple legal opinions, or even in fact often no action letters from governments to say, yes, this is an asset. It's not a security. It's not a derivative. It's not a currency. It's an asset. And so when you start putting itself in that, so like, for example, the EU signed off on the G coin as an asset. So Bitcoin and Ethereum didn't go ask the EU, but we did. We went to the before launching of, what is this? And we got a no action letter there. We worked with Switzerland, and everybody kind of treats it a little bit different to be in FINMA or their SRO, self-regulatory organization, that sits on top of, our FINMA entity. Dubai, we worked with the government there, with the DMCC more specifically, to have a authorized and approved plan, which included, the Gcoin asset. We worked with the Brazilian Central Bank and CNV in Brazil. So a number of countries around the world to work on what is that legal standing, what is that regulatory standing, and as of late, Gensler with the SEC has been very open in terms of a lot of these stable coins being securities. And I actually totally agree with them in the sense that they're tokenizing money market accounts, which are full of security. So it is a security, whereas we're tokenizing assets.
Or maybe not in some cases.
And has there been a new event, a recent event on that topic?
No, I might edit this out, but obviously the tether coin headlines don't look very good, do they?
No.
Okay, so that's one of the unique things about this, right? Because that also has knock-on benefits for banks. If this is an asset rather than a securitization, it actually can support the cash reserves they need to hold if their customers have these G coins in their accounts. Right?
Well, I think it's actually more transformational than that, Paul, in the sense that banks today actually don't want to hold cash on their balance sheets. They have to have deposit reserve ratios, and they have to. There's a pretty big obligation, and there's almost no return on it. So, the reason why it's more transformative than that, if you hold a G coin through our wallet technology, now you can hold a G coin through other wallet technologies as well, but if you hold it through our wallet technology, there's a unique key structure. And so the user or the owner of that wallet, that smart contract, they actually hold the keys. So that G coin, if the bank was to sell them, through this, technology, the G coin, it doesn't sit on the bank's balance sheet. It sits on, the consumer's wallet. It sits on the balance sheet of the individual. So you actually have a lot of regulatory efficiency. Basel III, you have an 80% risk weighting for your metals and on your balance sheet. In this instance, you have zero risk weighting, as a bank on your balance sheet for selling these tokens, because it actually sits on the individual's balance sheet. And so, particularly, high net worth individual, this becomes really powerful because you can easily go through the ceilings of FDIC, for dollar deposits or other locations. Whereas here you have, irregardless of the amount, there's no cap on it. It's on your balance sheet, on nobody else's. Nobody can take it away from you, and it's a fully insured product. On top of that, because the Gmint tokenization actually provides that insurance. So it's a pretty powerful combination of things in the sense that bank no longer has to hold deposit or regulatory capital or anything if their clients are using these asset tokens.
So where is Gcoin today? And I guess this is sort of bringing in the interoperability discussion.
It's a great word, and I love how, let's call it, the traditional world has adopted a crypto word, right? And interoperability, as you clearly know from our other conversations, but for listeners, is just being able to move from one blockchain to another blockchain. And that's where the root of that word started from. And it's like, well, can you be on Bitcoin and Ethereum? And now there's so many other parachains and other things out there that it has a much bigger connotation today. But I totally agree with you, and the way you use the word, Paul, is that what's that interoperability back to traditional Swift and even alternatives like mobile money or e-wallets and these types of things. So Gcoin, we've integrated, for example, into MoneyGram. We've integrated it where we have a strategic partnership with them. Their wallets and our wallets are interchangeable. That likewise with MasterCard, we have a strategic partnership. But we also run a payments business where we can enable e-commerce companies to accept Gcoins as well as Bitcoins and other cryptos and other alternatives, mobile monies and different things. And So we wire into many, many places around the world: Paytm in India, EasyPay in Pakistan, Alipay. We have Airtel, MTN, Tigo, Vodafone, Mobile Money, just a number of different places as we can to make that interoperability happen. The beautiful thing about what we've done so far is it doesn't matter if you tokenize the gold, or if you tokenize pineapples, or maybe even cocoa or coffee. You pick what you want to tokenize. If you have that interoperability, or you have this kind of hub connectivity amongst things, then that interoperability can exist. But you have to have connectivity. I mentioned a little bit, but maybe not that much, about the chain that we built. We built a blockchain. We worked with JP Morgan's Quorum, and we built something we call QoS, where we fine-tuned our chain for payments. So we slaved our chain to 1 second block times, and we do 10,000 transactions per second. So we wanted to have speed, velocity, throughput, so that you could use these asset tokens like payment, or you can just in time load your prepaid cards and have a very clean user experience on things. And so our chain is called QoS, but we actually just put Gcoin onto public Ethereum as well. We worked with a firm called Cross Tower, and so on Thanksgiving Day, so to give you an idea how wild these markets are. Most traditional markets were closed on Thanksgiving Day. We launched Gcoin on Cross Tower's network, and so we had interoperably put QoS on, or the Gcoin on the QoS and the public Ethereum chain, and now you can buy it on the exchange that Cross Tower has. And so now you have trading pairs: Bitcoin Gcoin, Ethereum Gcoin, Dollar Gcoin, and so on. And so it's exciting to see how interoperability can help start creating adoption and comfort and price discovery, and any number of different topics that are important for something to be successful.
And might meet a real need out there, or desire for stable coins that are tied to a real asset underneath them.
Absolutely. Or some people need something to trade in and out of. When there's so much volatility around the cryptos, sometimes you want to be there, sometimes you don't. And so
Yep.
and we want to make sure that this is a viable alternative in those instances, as well as in of itself. Can you imagine if the Gcoin, the utility nature, and it was fairly priced in, and Gcoin could be 2 times, 3 times the price of gold if you
Yeah.
value utility. Who knows?
Which would then drive more producers onto it.
Exactly.
The conceit of this episode is really saying, okay, you built this technology. There's this technology out there. There's the growth of the underlying understanding from the public, demand from consumers, the frameworks are getting built. This ultimately leads to a point which you discussed earlier on, the idea that there's no reason that this couldn't apply to all asset classes. And certainly in the commodities world, where you've got a coffee producer who would rather just who meets the various protocols and can therefore just get his or her coffee onto the C coin, and then suddenly that unlocks a whole lot of opportunity for them to get, whether it's getting better prices or whatever it might be. Can you just, let's sort of put our spacesuits on for a minute and talk about where this really could go, and how all those different closed loops could really transform the world of commodity trading for producers, for traders, and consumers?
We have an office in Accra in Ghana. We have about almost 30 people there, and they're working in payments and supply chain and other things. We actually have we've been licensed by the Central Bank of Ghana. One of the significant commodities in Ghana is cocoa, and gold too. By the way, I mean there's more gold per capita in Ghana than any other country in the world. So I mean we're there for a reason. But there also cocoa. I mean if you look at a very substantial part of cocoa supply in the world comes from Ghana and its neighboring country, Ivory Coast. And the way that the value in a physical supply chain works is you have a bunch of small cocoa producers, farmers. They sell to a cooperative, and that cooperative sells to somebody like Barry Callebaut out of Belgium, Switzerland, Europe, let's just call it. And so they've done a great job on sustainability, and they want to know kind of where their cocoa is coming from. But at the same time, you're not really sure who's making money in the entire value chain. So if the C coin stood for cocoa instead of coffee, Paul, maybe we could actually have the cocoa farmers paid in cocoa coins, and then you can actually see that how much is the manufacturer, how much is the wholesaler, how much is the aggregator, cooperative, government taking, how much is the actual individual farmer actually receiving. And from a sustainability perspective, that's what's end consumers and ESG investors are most interested in is that let's make sure that the actual person who's doing the heavy lifting has sustainable living conditions, is able to earn that fair return. And so if you can match the physical with these tokens, all the way down, you can actually accomplish the mission that a lot of people are on today. And then you can make that C coin interchangeable with the G coin within the whatever digital central bank currency, or you can have that market across things. But you could have, and actually, by the way, in that example, the cocoa farmer is happy because often they aren't able to actually sell or lock in the high cocoa price on the day that the market spikes. And so you can give them hedging tools. You have the ability to really let them manage their lives and be connected into the global world in such a way that they're elevated, from their current circumstances. And then you can have real change.
Yeah, it's kind of it's fascinating because they'll also be protected against FX fluctuations, all of these other things, right? It's almost a return to a much more efficient barter economy in a way.
But it is. I mean, that's what commerce has been based off of, from the beginning of time, is barter, right? And so, something of value versus something else of value. And in this modern world is that you can actually efficiently price that. What's your digital asset versus my digital asset? And it's 24/7. It's borderless, and then you have an ability to participate on your terms. And that's basically every person becomes their own central bank. We hope that Gcoin could be the central bank of central banks, but that's ultimately what's happening is everybody becomes their own, control their own destiny.
What does this mean then for the established traders in the world today? How will this transform? Because obviously a lot of the value driven by the traders is their ability to better price things than the average person, to extract a lot of value during the transformations down the supply chain.
I think that ultimately what might happen is you might find, instead of the reference point being Chicago, or the reference point being, what London, or the reference point being whatever, you might find that you have distributed, pricing, in the sense that why not Rondianopolis, Brazil being the pricing point for, grains. I mean, there's more grains that flow through there than any other city and probably in the world. And so you could have localized price discovery on these things. And so, could a trader still play a role? Absolutely. But now it's like, okay, Rondianopolis versus Chicago. Or, you start getting, these types of things, and then it becomes, a market making, a market efficiency, type of function on things. And it's not just like, hey, I make a spread because I sit here. It's like, well, I'm providing liquidity, I'm making the market, I'm connecting these different things. And so, I do think there's a room for traders, but in that instance example, they're really wearing a proper trader hat. And so, their job descriptions might change or evolve a little bit, but I think there's clearly is a role for those functions in this world where we have connected circular economies.
Fascinating. Just before we let you go, obviously you, alongside creating Gcoin and this whole ecosystem, De Jong Capital, your investors in the commodity value chains. It is, to all accounts, an exciting time to be in commodities. Where are you seeing opportunity? Kind of what else are you looking at that kind of you think is going to be the trend over the next 3 to 5 years?
My background is really as an opportunistic investor. And, I've been on the investment side for more than 20 years now. And I tend to go where other people don't want to go. And so, the world's very structured in terms of there's a lot of people with mandates for whether it's credit or equity or different things. And they have a square box that they manage within. I really like finding those things that are a little bit outside of those square boxes. And because it's a greater value that I can provide as an opportunistic investor, and that might be a mezzanine, debt piece, or maybe it's a little bit smaller, mine or producer or processor. And so that's where I'm spending my time. We've invested heavily in fertilizers in the past. Love to see that that's coming out in a very aggressive pricing way. That was a much longer investment cycle than initially thought, but it will end up being far better in terms of total returns. And so, it's neat to see, that what we've put to work can make money both from the commodity perspective, but also an operational improvement perspective. So we're active, and we've been quite active, and we'll continue to be active in the space, and broadly excited, quite honestly.
Fantastic. So you can get a Gcoin wallet today if you'd like on
So in
gcoin.com.
the United States, yes, it's available in 33 states. We just bought a bank, and so that will help us transport across all of the states. And then come January, we'll be launching globally. We've been laying the framework, as you heard, through this time for more than a decade, and so I'm pretty excited to see all just get supercharged.
Fabulous. Yeah, well, it's going to be an interesting journey to watch for sure. And I think the takeaway from this is that you already, this technology, I mean, it exists. It has such huge capacity to meet those sort of connecting threads of traceability, but also DeFi or financing that's lacking, and as well as how will commodities trade in the future. So yeah, it's been a fantastic discussion, and look forward to having you back on in a few years and see whether we've got a Ccoin and the rest of them.
Look forward to it, Paul.
Thank you for listening. If you enjoyed this episode and want to support the show, please give us a positive review on Apple Podcasts or Spotify. To find out more about HC Insider and Human Capital, a search firm dedicated to the commodities sector, go to www.hcinsider.global, where you'll find more original content on the commodities sector and more details on our offering as a search firm and our locations around the world. Thanks again for listening.